All right, guys, welcome back to smarthelping.com. We got a little update here on the equipment rental templates. There's two versions. The one version, and both are included in the one-time purchase. So the first version is just your regular 10-year model. You can change the utilization by a year, um, and what I added to it that it didn't have before is the executive summary, which just shows the high level items. So, like before, it just had annual cash flow, but it was kind of hard to read if you're trying to get a quick view. It has like all the different line items here that make up all the main subtotals. Here is just the main subtotals. So, you've got your revenue, operational costs, EBITDA, any debt service, funds from financing, cash flow. So this was not on here before. I think this is a helpful benefit to have with the equipment rental model. The other thing I added was a discounted cash flow, so you can see kind of if it makes sense for the operations to the cash you're getting from operations against the cash it requires to start, and then at whatever discount rate you apply. Now the cash required to start here, it's not including any investor funding. Well, there is no investor funding inputs for this, so this is just saying the total cash you need, and this is mainly from purchases of equipment. But it would be any month that has a negative cash flow, the total goes here, and then any month with a positive cash flow goes in here per the year that we're summing up. There's also an assumption for an exit value based on some multiple of EBITDA, and then debt repayment in the last year. So the main reason this is useful is you can see at some discount rate if the cash required to start the project and run it is worth the returns that you're getting at whatever discount rate. And you can see I also added an internal rate of return here, and that would be what makes the present value, net present value of the future cash flow 0. So if you see I plug this in here, it would discount the future cash flow, so the net present value actually equals what requires a start. And that's why internal rate of return is useful to know, because it's basically saying risky how risky are the future cash flows based on how much it costs to acquire those cash flows. So that's the updates to V3. Again, just adding an executive summary and a discounted cash flow. The other version, which is modified, has assumptions for investor funding. It already had an executive summary, but I added a discounted cash flow to it. Now this model you can see only goes for 5 years, but the assumptions are more granular for revenues. So you can affect the utilization per month every quarter. You can change it rather than the other model where it goes out 10 years. You can only change the utilization every year. So it might not be that important, but both the templates are included at the for the one-time purchase, so you can play with either of them. But now they both have executive summary and discounted cash flow. All right, that's all I got for you for now. If you want to purchase them, just go to smarthelping.com, and they'll be under. If you go to financial models, they'll be under the general industry specific rate here. So closer to the bottom, and you just click through there, purchase it, and I'll send you both the templates. Um, and like I said, both of them are included with the one-time purchase. All right, that's all I got for you now. The next model I'm going to have, which hopefully will get done this week, is something for a manufacturer that builds 3D printers and then sells those 3D printers to people who want to use them. Or they could sell them to people who want to farm out the services or whatever the case. But it's basically going to be for a company that buys things and sells them. Uh, so we'll see what happens there. All right, see you on the next one.